Good afternoon, everyone. Today I'm chatting with Simon Clarke from American Critical Minerals. In today's interview, we get into the recent traction in American explorers and developers with the U.S. government now stepping in and making investments. And we get into KCLI, which is the ticker symbol, or American Critical Minerals, as the company's called, where they have a project that has both potash and lithium. And since Simon stepped on, the stock started moving forward and the company now seems to be on the right track. And given all the traction that's happening in the US, I thought it would be a great time to sit down and ask about some of the recent news flow that's been happening with the company and what the plan is for the next year. All right, everybody, enjoy the interview. Simon, it's good to see you again.
Great to be here. Thanks for having me.
So since the last time we talked, the big news in terms of big picture is that potash has been added to the latest draft list for critical minerals in the US. What does this mean for the industry and in particular for the explorers such as yourselves?
Yeah, I mean, it has been a critical mineral in the past. Somewhat strange it came off the list when you consider 95% of potash into the US is imported. But, obviously a large chunk of that has been Canada in the past. And clearly, with this administration's relationships with Canada and lots of other countries around the world, and tariffs and issues, there's no doubt this administration is trying to do something about that deficit. So making it a critical mineral makes it easier to get Department of Agricultural money, other government funds that are out there. It actually helps getting permitting. It should help short circuit permitting, and just puts it up another level. So I think it's a really great step for potash in general. And obviously for us, the other big play is the lithium play, which is already a critical mineral. So, and we've seen some incredible moves by the US government on that front in the last week or so. So I think it's a great time.
So let's get into that. We have seen a massive flow of investment from the US government to explorers and developers with projects specifically in the US. What do you think has driven this policy change?
I think it is tariffs, it's trade, it's not wanting to be beholden to other countries, even Canada. On the potash side, obviously, Russia and China are somewhat off the table, we think. It's a difficult macro picture, but it's clearly the stated aim of this government to strengthen its own supply chains. And again, in a product like potash, where you import 95% of it, that's key. And so, I think they've really made their statement of intent clear here. It was good to see Sage get $14 million from the Department of Agriculture. There's a lot of money there. It's not even a loan, it's a grant, which is even better. And most importantly, this last week was the government taking an equity stake in Lithium Americas. I mean, that's just not happened. So you've seen the Department of Energy lend $2 billion to build Thacker. Well, now this government's taking, a much riskier position and has 5% directly of the company. So I think that's really good. And I think what it also shows is they've recognized you can't just put money into building things. You've also got to put money into development stage projects, and help them find the capital they need to drill, advance it, get it to the point where you can build it. So I think it's a huge statement of intent.
Now, you mentioned Sage getting $14 million in a grant from the US government, which I don't even believe is fully priced into the stock yet. Uh, have you guys looked at working your own projects into the current fast track programs?
Absolutely. I mean, they are a little bit further ahead, in terms of their development cycle. I think we actually have a really intriguing plan that could see us fast track. To get that money, you have to be, I think it's within 18 or 24 months of production. And so, Sage obviously went down that route. We're developing a plan where I think we'll be able to do the same. And there's a lot of money available, under the Department of Agricultural plan.
So I'm going to take a step back here because there's going to be people in our audience who are unfamiliar with American Critical Minerals. My understanding here is that you guys have a deposit. You guys got lithium and potash in the same sort of area. For our audience, what can you tell us?
Yeah, so this project started life 12 years ago. It was put together by a really well-known geo in Vancouver called John Gregg. He was an oil and gas guy by background, but talking of precious, as we were earlier, discovered 30 to 40 million ounces of gold in his career, and was supported in all of his ventures by a couple of the big book brokers at Haywood. And he put this project together because he thought it was the flattest lying and most central part in the main potash fairway in the paradox. So really focused on potash at the end of the last cycle. It took a lot longer than would have been like to get the company permitted and get it, to where it was ready to go. And I guess that culminated with them bringing me in at the end of last year, at the time that we did get the federal potash permits. I think what happened with the focus on the potash side, and the company really just limping along for a number of years, is they missed the lithium cycle last time round. And we're really fortunate that a close neighbor, in fact, their land is contiguous with us to the north, and Anson Resources did a ton of work drilling, has piloted an exceptionally strong pilot with Coke, getting it to battery grade from the brines. And on the back of that, you've seen POSCO sign an MOU with them, and 2 weeks ago, they signed a definitive offtake with LG Chem for battery grade materials. So it's been a great run for them, and we haven't put a dollar in. We have the same brines across our land, and so now we're very much a potash and a lithium story. We made sure we secured both by filing all the placer claims in addition to our potash licenses. We have to pay twice, unfortunately, but it makes sense to do it. And this culminated in us coming out actually on Monday for the first time with a large exploration target on the lithium, and the main byproduct of the lithium production is bromine, which occurs in a large amounts, large quantities. Anson found the same. So we're now in the position where we have three large exploration targets. We're permitted to drill, and now we got to get drilling.
Okay, so with this target now defined, what's the next steps here?
So the next steps for us really, as I say, we've pretty much done everything we have to. We're fully bonded on our state wells, our state holes. We have to pay our bonding on the BLM side. We've agreed that with the BLM now, and then we can move into a drill program. And we've always said, and it's been validated by our engineers Agapito, that 2 to 3 holes here will get us a large resource on both the potash and the lithium side. We have 23 historic wells across our land and around it from oil and gas. We know what we're going to get. It's brownfield drilling, but we can't talk about that as a resource until we do our own drilling. So we've got to get in the ground and drill. These exploration targets have helped us really pinpoint what we're going to do, and the scale of the project. So, we know it's very large, and as I say, the next step is to get in there and drill.
So, what sort of development timeline are you guys working on here?
Yeah, so I mean, we'll have to raise some capital as we move forward over the next few months here to get the capital to drill. But as I say, we can very quickly finish the bonding with the BLM, and then we can be in the ground drilling within 2 to 3 months. I think the question is, do we drill an initial hole to validate, some of the main historic drilling that was done in the past, and then add the other two after that to delineate a big resource, or do we do all three at once? So that's kind of what we're going through. I would say within 6 months, of starting drilling, we would have resources on the lithium and potash side, and then they're really in a blanket style of mineralization like this. There's not much point going to PEA. I think you'd go straight to PFS, and I think you can have all that done within a year for sure.
My understanding with just if I'm an early stage investor and I'm looking at the two things, you got lithium, you have potash, is that potash is like just the returns on capital for investing in an early stage potash company uh, tend to be the path to production is a lot faster and cheaper than say lithium. Would that be accurate?
Yeah, I think if you look at it traditionally, traditional mining, that's probably correct. The nice thing about the paradox is you can solution mine, which is the most efficient way of extracting potash. So, I mean, this has been done by Intrepid at the Moab mine, which is 20 minutes as the crow flies from our project. They're on the same salt horizons as we are, same potash cycles. And so, much like uranium, you inject into the formation with a warm brine, and then you pump it to the surface and concentrate it. It's a simple, very cost-effective way to do it, but you can't do it in all the basins of the world. You got to have the heat gradient and the depth has to be right. And so we know we can do that. So that makes it pretty efficient and good returns, as you've said. And potash is a more mature commodity than lithium. The problem with lithium is we've seen the huge swings up and the huge swings down. That said, I think what people maybe are missing is you can look at a project like Thacker Pass, which needs billions and billions of dollars to build it,
Mhm.
a real mining engineering operation. Or if you look at a brine, yes, the brine is deep, but effectively what you're doing is you're pumping the brine up from 8,000 feet down, putting it through a direct lithium extraction, through a membrane or a resin, taking out the lithium and then concentrating the lithium to battery grade and pumping what's left back into the formation. So environmentally very good and a lot cheaper on an operational cost. I think if you look at Ansom's DFS on their project to the south of us, they reckon it's about 37.50 a ton on OpEx. You compare that to Thacker Pass at about $7,000 a ton and significantly lower capital. So I do think that the brines are potentially the way of the future here on the lithium side for sure. And you've got all the big energy companies throwing lots of dollars at it. It's happening.
Now, this may sound silly, but when you're talking about brines in Utah, isn't a big part of the brines letting sort of the sun do its work to evaporate the
Yeah.
water? How, like, when we think about lithium brines, we're usually thinking of Chile and Argentina, where I assume that it's sunnier or hotter. Is that accurate? How does that change it?
Well, no, I mean, if you look at Intrepid on the potash side, they've had solar evaporation ponds for the potash for decades, and that's how they do it. It's the cheaper, most effective way of doing it. You can, if you look at Sage, for example, they talk about mechanical separation, and that's how they're going to do it because they don't have the water where they are in their part of the basin. But for us, we have the BLM has already designated lay down areas on our land where you would potentially put in ponds. I mean, if that's an issue, as I say, you can concentrate in different ways. But I think the main thing in today's world is you can re-inject a lot of what you pump back into the formation, which obviously is way better from an environmental perspective. So yes, it's a short answer to your question is you can use ponds for sure, and Intrepid has for 50 years at the Moab mine.
Okay, so Simon, last question for you. If I'm an investor in the company, which I am, or if I'm sitting at home and I have you guys on my watch list, what am I looking out for over the next 12 months? What does it mean for you to move the company forward?
Yeah, I think it can't be understated how big the news this week was on the exploration targets for lithium and the byproduct in bromine. I think we've really now showcased that we have both and in very large quantities. There's going to be a lot going on. I mean, we will be looking to finalize bonding with the BLM. We'll be looking to get drilling, and obviously we'll be coming out with drill results. We've added to our team since we last spoke. We have a guy who is a senior VP at Intrepid, joined our advisory board. And we're looking at another big hire in the industry. So with lots of technical expertise, I mean, obviously the nice thing we've got is when we drill a hole, we test then that hole for potash, and then we go down and test the brine. So we're able to do both lithium and potash in one hole, which is great. But they are technical holes. And, it's key that we beef up the team as we take this next step. And as I say, look for confirmation drilling, maiden resources, and PFS over the next 12 months.
All right. Well, Simon, thanks very much for hopping on here, and I congratulate you guys on the recent success that you guys have been having with the share price and all the catalysts that have fallen at your back here. So appreciate you taking the time to do this, and let's do this again after you guys have some more big developments.
Yeah, absolutely. And, we're going to keep closing that gap on Millennial Potash and Sage here in terms of our price. So I think there's a long way to go.
Well, look, I'm a shareholder in Sage as well. So as long as both you guys rise, I'm happy.
Well, yeah, absolutely. With 95% of potash imported, there's lots of scope to do that. The nice thing is we have the lithium as well.
All right. Thanks for doing this, Simon.
Thanks very much. Cheers now.
All right, everybody. Thank you for watching. If you enjoyed this interview, do me a favor, smash that like button, subscribe, and ring that notification bell. All right, everybody. Thanks for watching.